For most of our lives, the US dollar seemed untouchable. It was strong, trusted, and global. Oil was priced in dollars. International trade was settled in dollars. Central banks around the world hoarded dollars like a financial safety net. And then, slowly, almost silently, things started to change. Not with a dramatic crash, not with a headline screaming collapse, but with a quiet shift. Today, the US dollar is not dying. That's a common misconception. What's actually happening is that it's losing its unquestioned authority. And that subtle difference matters more than most people realize. Because currencies don't typically collapse loudly, they weaken quietly, almost invisibly, until one day you wake up and notice that your money just does you and D by the same future it used to. The first crack in the foundation wasn't about the currency itself. It was about confidence. The dollar's power was never just about the paper it has printed on or the numbers in a bank account. It was built on trust. Trust that the United States would remain politically and economically stable. Trust that its massive debts would always be honored. Trust that its system of governance would remain predictable. Now, that trust is being tested. I want to be clear, it's not destroyed, it's being tested. We're seeing massive government spending, a national debt that keeps rising with no serious plan to reduce it, and intense political polarization that makes long-term policy feel unstable. None of this is enough to collapse a currency overnight, but it forces other countries to ask a very important and frankly dangerous question. What if we don't want to rely on this system forever? This leads us to why the East is slowly, methodically, walking away. This isn't about some deep-seated hatred for the dollar. It's about self-protection. It's a pragmatic business decision. Economies in Asia and parts of the Middle East have grown so large that they no longer need to accept being completely dependent on another nation's currency. They trade more with each other now. They produce more internally. They hold more leverage in the global economy. So, they are doing something very smart. They are reducing their risk. They are not dumping their dollar holdings in a panic. They are not announcing a rebellion. They are just diversifying. We're seeing more trade settled in local currencies, more bilateral agreements that bypass the dollar, and more alternative settlement systems that don't require the dollar as a middleman. This doesn't kill the dollar, not at all, but it reduces demand at the margins. And in the world of finance, currencies live and die at the margins. There's another piece to this puzzle that most people miss, and it's the weaponization of the dollar. The dollar didn't just dominate global finance. It became a powerful tool of foreign policy. Think about it. Sanctions, trade restrictions, financial pressure. These tools are incredibly effective in the short term, but they are dangerous in the long term. Because, when a currency becomes a weapon, other countries inevitably start looking for armor. And what does that armor look like? It looks like alternative payment systems. It looks like regional trade blocks. It looks like experiments with commodity-backed trade and digital settlement platforms. Again, this isn't a revolution. It's insurance. And the very act of buying insurance reduces your reliance on the thing you're insuring against. So, is all of this happening because of war, or a looming recession, or widespread panic? No, those things are accelerators, not causes. Wars can speed up existing trends, and recessions can expose hidden weaknesses, but they don't create these structural shifts from scratch. What's happening now is fundamental. The global economy is no longer unipolar. Economic power is now spread across multiple regions. Technology has made it possible to conduct finance without relying on a single financial center in New York. The dollar was built for a world where the US sat at the absolute center of everything. That world is fading. It's not disappearing, it's just fading. So, what does a weaker dollar actually mean for you and me? A weaker dollar doesn't mean America collapses. It means imports cost more. It means your general cost of living creeps higher. It means foreign investment in the US becomes more selective. And over time, it means servicing our national debt becomes heavier. For everyday people, this shows up in subtle ways. You see prices rising even when the economy isn't growing much. You feel your savings losing a little bit of their purchasing power each year. You sense that your wages are struggling to keep up with the real cost of living. For investors, it means that returns become uneven. Some assets will do very well, while others quietly bleed value. So, is the dollar finished? Absolutely not, but it's no longer alone at the top. The dollar still dominates global finance. It's still the deepest, most liquid market in the world. It's still the default safe harbor that everyone runs to during a panic. But its dominance is no longer exclusive. The future is looking more and more multipolar. We're heading toward a world with multiple strong currencies, multiple trade systems, and multiple centers of financial gravity. This is not a collapse, it is a transition. And history shows that transitions always reward preparation, not blind loyalty. Given all this, should you still invest in the USA? The honest answer is yes, but not blindly. The US still produces world-class companies. It's still a leader in innovation. It still attracts a huge amount of global talent and capital. But the era where all roads automatically led to America is ending. Smart money doesn't abandon the US. It balances it. It diversifies into global assets. It holds real assets, like property or commodities. It spreads its currency exposure. Because when one major currency weakens slowly over time, diversification stops being an optional strategy and becomes a necessity. Here's what most people get wrong about this. They wait for confirmation. They want to see a crash on the news. They want a big, dramatic headline. They want a single moment of certainty before they act. But by the time that certainty arrives, the opportunity to prepare is long gone. Currency shifts don't announce themselves with a trumpet blast. They show up quietly in your grocery bills, in the cost of your vacation, and in the performance of your retirement portfolio. And by then, adjusting is no longer a choice. It's a painful necessity. The real risk here isn't that the dollar will fail. The real risk is assuming that the future will look exactly like the recent past. The dollar doesn't need to collapse for you to lose. It just needs to underperform quietly, and in many ways that most people don't measure. That's already happening. My final thought for you is this. This isn't about fear. It's not about predicting doom. It's simply about awareness. The global financial system is changing its shape. It's not collapsing, it's reshaping. Those who understand this early can position themselves calmly and strategically. Those who ignore it will likely end up paying for it later through lost purchasing power. So, the question isn't whether the dollar will survive. It will. The real question is, will your wealth and your financial plan adapt with the changing world, or will they stay stuck in yesterday's system? Thanks for watching. If you found this perspective valuable, consider subscribing for more content that helps you navigate our complex financial world. See you in the next video.